let me and Javi wholeheartedly thank you guys for being here with us, for having taken the time to share those questions. The way we're going to run it is just in chronological order by submission. So we've put in here who's going to tackle which question, if we know what the question really was, because some of them are not really that clear. And then there's also a blog post that Ben Hardy and a bunch of other Darwin providers took a lot of time to write, with a lot of careful thoughts in the community forum, which I really invite you to visit. This is the link, and we will also take the time to comment on some of what they're saying. For now, let me just say thank you guys for taking the time to do that. It means the world to us, and we wouldn't be anywhere without these very generous contributions. So without further ado, let's get going with the questions, and that's the order. So first the questions, of which is I think something like 20, and then we go for the blog post, which is more of a general where's Darwinex going situation. So Greg asked, he was very nice, saying how happy he is that we exist, and for us this means the world. And he basically is worried that we could basically, that we've built our baby, we could cash out of this and sell it to somebody who might rip it apart, or copy their strategies, or front run them, or what have you. So I think this is a legitimate concern, obviously, by Greg, because we're dabbling in something which is very precious to him, which is obviously his money, and also his know-how and his trades. So we totally appreciate how important this is. I mean, I can see a number of people here have known us over the years, and I think once you have done so, I hope you appreciate that a lot of what we're doing is not really for the money. I mean, this company is the solution to Javi's problem. So it was created because Javi had the same problem that you guys have, that you thought your strategies were worth investors' money, and it was just very tough to tap into it. So there's a lot of a dream coming true in what we're doing here. And generally, we have already had offers to sell out of the company, and we're not here to sell. What we do want to do is grow this baby faster, so that it can service more traders better than it does currently. I mean, many of you guys make very valuable suggestions as to what we should improve with the product, and we, sometimes there are surprises, sometimes there are things which we know we must fix, and we can't really fix because we just don't have enough programmers. I mean, I think Darwinex has grown to a headcount of currently 45 over the last 6 years, and this is a very heartfelt thank you to you guys, because your business is what powers all that. And ultimately, for us, we're in this for a mission, and we're not quitters, and we will continue driving this forward to make the vision come true. And I don't think neither my brother nor I, push comes to shove, we are not going to sell this to anybody in the short term until we feel that Darwinex is able to stand on its own, delivering the service that Greg loves. And if we feel that that's not going to be the case, that's a bit like basically having a son that goes to the dark side, and that is not a pain we're willing to sustain for money right now. And the other point I really wanted to make on this one is this point about, of course, it is your company and you can do with it what you like. And my answer to that is, it was our company back when we founded it, but now it's it's a company for 45 employees, but also several thousand traders in many countries, and that makes it a different beast. So it's not our thing, it is your thing, and to the extent that we all contribute to it, it will flourish and deliver on the promise for more and more traders. And actually, one point which is important there as well is growing Darwinex and bringing more investors, more traders, and better functionality to both traders and investors. It's not our company, I think, like ours and Javi's and mine, it's everyone's, and we need you guys to grow it. I mean, it's only if you give us feedback on how to improve it and actually recommend this forward to traders who don't know it. I think 80 to 90% of users who join Darwinex do so on the recommendation by an existing user. I mean, the referral effect is that strong. And it is also that strong because by definition, if traders have to be successful, we cannot charge too much in terms of trading costs, which is our only revenue source. So, and we don't debook, as you know, so our margins are far lower than those by competitors who advertise to acquire new users. So to cut a very long story short, I would say thank you so much, Greg, for your nice words. I think the way to make it as much your company as it is ours is to share with us what we can and should do better, but also share with others that there's a better way than burning and churning customers, and that way currently is Darwinex. I mean, we look forward to the moment when there are competitors, but right now we just feel like we are in a category of our own because we are on a mission to fulfill a vision, and we're two very, very pig-headed and stubborn guys who will not sell, and certainly in the short term, and certainly not sell if we feel in any way, shape, or form that the vision is going to be corrupted. Okay, so that was, I mean, a pretty lengthy beginning to the conversation, but I think this is a very heartfelt point for us, and I wanted to make that very clear. I don't know, Javi, if you have something to add on that one.
No, it's. I agree with you.
Okay. Right. So there's a question by Hierarchy FX, which is how will leverage change under ESMA? And I think that has been explained elsewhere. We have also posted on the blog. I mean, you can look it up pretty much, but it's after 30 to 1 in the majors and down to 5 to 1 in the others. So I'm just going to share a blog post that we've done on this one here for general service. So you guys have an answer on how this is going to change. If I manage, for some reason, I can't type the answers there. But if you can see the search, it's ESMA leverage Darwinex. It's going to take you to the blog, and that will basically answer that one. For some reason, I cannot type answers into the webinar functionality right now. So that's the leverage thing, 30 to 1 for the majors. Well, nothing if you're a professional, 30 to 1 for the others, and then it's published elsewhere. So this one is also an interesting one. So we need share profit with introduces to investors, 1 or 2 level and 130 plus. I'm not sure I understand the 130 plus, but this is another point. The way we think, the way we want to grow Darwinex is to have a larger and larger share of investors tapping into a larger and better pool of Darwins, because we are convinced that there are already good Darwins that people can make good profits with, but the more that stock grows, the better the investor results, and there's nothing more viral than a good product. So investors will eventually share this with other investors because they like the product. That is at least our strong belief. If we introduce a middleman between us and the investors, that middleman will of course have to work to get investors, and also he will need a share in the investor profits. But that is a dangerous one, because of course if investors lose, then we tarnish the reputation, we tarnish the asset, and we don't ultimately think it is necessary to have introducers for investors, because if the traders are good, the investors eventually come, and that's actually what we have experienced in our in the last couple of years, and we don't really plan to have any introducers, let alone, not because we don't believe in it, but also the way all regulation is going is that the role of introduction is going to be very severely curtailed. So we think that's a dead end in the long run. Javi, any comments on that?
No. It's fine.
Okay. So Are we going to add E-minus trading in the near future? I think you put this one for me, Javi, but I think you're probably better for me on that than me on this one.
Well, the idea of launching, going to add E-minus trading. I don't know what this question means. I don't know exactly what the user wants to get answered. E-minus.
So Piers, if you can, we don't really know what an E-minus is. Apologies. So if you can type the question again or explain in more detail, we'll come back to that. There's another one which is how to keep account at long term. I mean, again, if you can clarify a bit, that would really be very welcome, because we don't really get the question at this point. So we'll leave it for later. This one was really interesting by Drew. So from an investor perspective, do you intend to improve the functionality of the platform to accommodate professional portfolio managers? Currently, the platform is inadequate for serious money. It is certainly suitable for a private investor, though. Also, should you go down that road, will you then allow professionally run portfolios to be traded, have their own ranking, and open them up to capital? Doing this will open up a whole new world of capital that will aggregate the successful traders. This is a very good point. So I don't know where to start, right? From our standpoint, we try to make the platform, adequate for serious money, because money is serious for everybody. So if I've already written privately to Drew for if he wants to have a private chat with me on explaining what he feels the inadequacies are. I'm not denying there are inadequacies by all means. So I'm just very keen to understand, what are the three things that Drew would want us to do so that we come closer for the platform being adequate for serious money, and we will by all means work on those. There are a number of improvements we are doing, of which you'll hear in due course when it comes to protection of funds, more choices of banks, and a whole bunch of other things. And very much the idea is we see that we do the bulk of our revenues with our most expert users. So if anything, Darwinex is going to go for for the current sophisticated user, because we know with very few users we can generate a far more sustainable business when those users know how to make the most of the platform and the traders, because then they win, the funds grow, and the traders are happy, investors are happy, and so on. So will we allow professionally run portfolios to be traded? I mean, to the best of my knowledge, I think we already do, or we try to. But again, we would be very open to Drew suggesting what he feels are things we need to do to get there. And we totally agree that the more professional both the traders and the investors on the platform, the closer we come to creating a new asset, which he describes as a whole new world of capital that will aggregate the successful traders. Javi, questions on that?
No, it's fine.
Okay, so how does the potential loss of the EU financial services passport affect Darwinex? I mean, the earliest that a hard Brexit could hit is March 2019. We're taking a very close look at options for setting up an additional license onshore. So the potential loss of the EU financial services passport through our FCA license will imply that main European users will not be able to trade with our FCA license, but they will be able to trade with an EU onshore license, which we're already looking into. So the answer is it will not affect us. So a spectator asks us, hi, can you please let me know whether you're planning to expand to futures market one day? And the answer is very much so. We have already announced this in the past. Unfortunately, we have been hit by a deluge of functionality demands for compliance and regulatory reasons this year, which I don't think anybody expected. And unfortunately, that has taken up a lot of our developing capacity, which has gone into things that you don't see, but we must do in order to legally provide you with a brokerage service. But there are two things which we regard as a strategic priority for Darwinex. One is to offer futures trading, and the other one is to structurally improve the investor replica model, so that we do away with the concept of divergence, as we'll see in a bit. Hope that answered that question. So if anybody has more questions on that, I mean, so Feliciano, which has a related question, which is, how does the ESMA change in regulation affect Darwinex? And the change is, we have changed our permission. We now carry a broader permission to do exactly the same business model, because there's another question by Alejandro here asking whether Darwinex will become a market maker. And the answer is no. So Darwinex will never have a conflict of interest against its customers. We don't plan to change anything other than the leverage offered to retail investors from the 1st of August. So Smart Trader is asking us to take a clue from other brokers allowing trades open before 1st of August to maintain the old leverage. A lot of traders will lose significant amount of money by abruptly closing trades just to be within the new margin. That is not what we see in our data. So we don't see that as a general issue. We do see it, you know, there are of course exceptions, and it seems like Smart Traders is one of them. You know, we feel the ESMA thing has been long time in the making. It's something which is it's not going to be overnight. So there's talk about 3 months, but we suspect this regulation is here to stay. So, you know, at some point, traders will have to adjust to the fact that there's a new leverage regime and act accordingly. And unfortunately, you know, I appreciate the temptation to blame it on us, but you know, we're doing what we're told on this one.
Okay, but Juan, can I add something? So from the operations perspective, we spoke to MetaQuotes how to deal with that, what the Smart Trader is requesting, and the problem is that the answer they gave us is we should create new symbols so that we could have two types of symbols for those trades who were open before the 1st of August, and the current symbols for those who are open after that. The problem with that is that we have seen that operationally it could be complicated, because for an EA, anyone who is running an EA, we must be sure that they could adapt to these two symbols without having any problem. And from the moment that we have a lot of investors already that are replicating EAs from traders, we thought that this could be a mess for our investors, and that's the reason why we decided not to get into that risk. From the other side, knowing that this could be a problem for certain traders, we decided to explain exactly how it would work with 2 weeks in advance, so that people could react. So that you have 2 weeks to close those trades, not just on the 1st of August. That's the reason why we decided to announce our criteria so soon, no? So early. That's, as I said, it's an operational risk that we didn't want to take.
So Smart Trader, I hope that answers your question. I'm sorry that you have been collateral damage about this. So we really hear you. But
and there is another reason to take into account, that is from the 1st of August, Darwinex needs to protect from any user from getting into negative equity. And whenever we keep allowing this huge leverage, Darwinex could be also at risk if a certain flash crash happened during that moment. So it's operationally and also even if it's rarely that can happen, it could happen, and we want to be protected from that. And when we say we want to protect, it's not just we are protecting ourselves, we are protecting all our users, okay? Because whenever Darwinex goes bankrupt, it would damage, it would hurt all our users. So that's, I think we are in a position that we must do that, in this way, so to protect all our users, not just those who are carrying a huge leverage before this event. So it's I think it's what we are doing is it's correct.
Okay, so the other question was what happened to Darwin, the DWEX, which was an algorithmic index we created to invest in the best Darwins according to the score, and the answer to that is we decided to take experiments like DWEX private for a number of reasons. The core reason was that we don't want, I mean, if we are an exchange, strategically, we cannot remain an exchange that is neutral in offering investments to traders and at the same time provide investment advice or provide managed investments for third parties to invest directly in a kind of Darwinex portfolio of our own making. And that was one point. Then we discovered that the capacity, there were issues in managing capacity, which were pretty complex to handle in a portfolio of 60 Darwins, because some Darwins were, say, closer to with large divergence. There were others with smaller divergence. I mean, there were a number of technical difficulties which made us feel as though we weren't quite, you know, from either strategic standpoint, but also from a technical standpoint, in a position to offer this as a third party open to investors. And for that reason, we continue to make our own proprietary investments, and many of the traders will see that there is proprietary capital allocated by Darwinex to their Darwins. But we are not currently offering any third-party managed Darwin fund because we would like, you know, to build an ecosystem where third parties do that for us instead of us doing it ourselves. Javi, any points on that?
No. So, well, there is another reason to eliminate the DWEX, which is that if you think the amount of resources that we are putting into Darwinex labs to find a profitable robot trading on Darwins, the idea is, okay, why would I share this with my clients if I'm doing more money than just the commissions? No, so it's in terms of business model, it makes no sense. So here the most important thing is to give the more performance fees to traders, and it doesn't matter if it's us or other investors who do that. But with our investment in the inbot, the idea is that we can make more money than just the commissions. That's the reason why we prefer to if we found the holy grail, we prefer to keep it with ourselves, because we pay. So we are another investor, and we are paying performance fees like any other is doing. But saying that, one point which is important to mention is that we will never fill the capacity with our proprietary investment in any Darwin. So the idea is we are going to raise and we are going to invest more money gradually, but we will never invest more than 20% of the capacity of any Darwin in the inbot or in the DWEX, so that anyone else can do the same as we are doing if he finds the strategy.
So Stig, I hope that answered your question. I'm not sure if you don't seem to be live in the webinar, so you can always come back to us on that. So there's a question of Darwin migration here, which is a long-standing battle
Yes.
in the community. So I'll leave this one to you, Javi, and
Yes.
and comment if I feel.
Yes, there have been this kind of request. It's been repeated over time, and we have thought about it internally a lot. As Juan mentioned, we are a market, and we prefer to disclose or show the data that we think is necessary to the investors to take their own decisions. this is the reason why we decided to show whenever a strategy is migrated. That means that anyone that thinks that migrated strategies are worse than those who are Darwinex from the beginning, they are free to decide to not to.
I've just
not
switched
to
for like.
Yes.
So
no,
like to make the point more practical here. Yeah. Keep going then. Okay.
See, and there are several studies. We have done several studies.
No, but before we get into that one, so Javi, before we get on, because that's the next question.
Yes.
So on the point of the Darwin score, I mean, what we're doing is we're publishing the migration date. We are disclosing the fact that it's a migrated strategy, and that basically gives everybody the freedom to apply whatever curfew or a kind of probation period on Darwin's as they see fit. So that's kind of the way we look at it. So the D score is looking at the trades, assuming that the trades were true, and of course there's there's some uncertainty as to whether the track record that has been migrated. We apply some checks, but we cannot guarantee that, for instance, it's the same trader who run the track record in a previous broker who's managing the account at Darwinex, because ultimately we don't have a police guy watching who codes the algos, and we cannot get into that sort of game. All we can do is say this is a migrated Darwin and explain what that means, and explain our policy of validation, what we validate and what we cannot validate, and then everybody is smart enough to take their own risks. So
no, but there is another point which I would like to mention, is that it's if I'm sure that all migrated Darwins are bad, then probably I could or we could penalize them in the D score. But the thing is that you cannot generalize this, so I could even damaging a really good Darwin just because the others are bad. So I think it's better that any investor should be cautious. I agree with that. Whenever a strategy is migrated and the Darwin is created, I don't think it's a good idea to invest in it directly on the day of the IPO. We do that, for example, in our proprietary investment. We don't invest in any migrated strategy until it passed like 1 or 2 AD periods of time. So, as I said, everyone should analyze the data and with this data take his own conclusions. But it's impossible to penalize some really good Darwins who are migrated because others are bad. Okay.
And that brings us to the next question on who's better.
Yes, there are several about migrated strategies. I would like to say something too, which is we have seen some migrated strategies. There's certain types of migrated strategies that are really, in general, when they come to Darwinex, in a certain period of time, they start doing bad. And those Darwins are, most of them, they are trading at the market close, which is at when the Forex market closes and the futures market is closed during 1 hour, which is at the 11 o'clock European time to 12 o'clock European time. And the reason is that those Darwins, they came probably from a broker that offered lower spreads than Darwinex does in this hour, probably artificially. I mean,
market makers, yeah.
Market makers, yes, that they artificially lower the spreads to be more attractive to traders. And from the moment that we create a quote based on the execution price in the other broker, then once they came to Darwinex, they tend to do worse. So my recommendation is be really careful with those Darwins that are migrated, and at the same time they trade mostly on those at market close. Those are which are more toxic migrated Darwins, and I would not recommend to invest in them unless you see that those Darwins, whenever they start getting investors, that divergence doesn't
increase.
It does increase, then probably it's not that toxic, and probably it's a Darwin in which you could trust. But I would say 90% of the Darwins they don't behave like that. So they come to Darwinex and really fast the performance starts deteriorating. So as I said, be careful with those specific Darwins that trade at market close. When
Okay.
I say, do you happen to know whether it's migrated or native Darwins that work better? In general, those who migrate the strategy to us, they perform well. So I mean, mostly
there's a bias,
those,
right?
Yes, there's a bias, but if we made some studies, and if you have done any investment in the past in all Darwins from the moment that they were validated and they were migrated, if you had invested on those that had 65 or more D-score at the moment that they were migrated, with this strategy, you without taking into account the divergence, you would have made money. So I would say that in general, migrated Darwins are not that bad as people think. And there are really good Darwins, really good Darwins. I would say those Darwins who have the most asset under management right now, they are migrated. So I think, as I said, the clue is not to invest on those who trade at the market closed, and with that, I think, so with this,
summarize, beware of night scalpers, and yes. And we're also looking at ways in which we can incorporate the toxicness of the trading strategy into the investable attributes. So we think we know how to do it, but it will take time and development effort. Mm-hmm. So we're working on it.
Yes.
Okay, so I mean the next ones are all for you, Javi. So
I've heard that when a Darwin is good and the trader does a good job managing risk.
No, the previous one. Also when migrating and trading,
yeah. What should the trader take care of so that there are no ugly surprises with the Darwin that gets created of that migrated strategy? Well, the most important thing is that to keep the same leverage. So whenever you move your strategy to Darwinex, the leverage must be the same so that the risk manager works fine. And this is I think the one and only consideration you should have whenever you start trading on an underlying strategy at Darwinex.
Okay, next.
I've heard that when a Darwin is good and the trader does a good job managing risk, no stop losses should be used with it. Do you agree with this statement? Does Darwinex use stop losses when prop investing? This is a really difficult question. If we were sure how to define stop losses in Darwin's, we were rich. No, everyone will be rich. Here, and this is where we are at Darwinex. We work continuously to define how to deal with this new asset. I would suggest two things. There are two types of stop losses. One is for passive investment, and the other is for active trading on Darwin's. If you are a passive investor, you should care a lot. You should stop out a Darwin whenever he changes his trading behavior. This is the most let's say accurate way to define a stop loss. Whenever you see that a trader is getting into a drawdown, and in that drawdown at the same time it's changing his way of trading, that would be for me an immediate alert to close out my investment on that Darwin. Even if he's doing well, that would be me an alert if he's changing his pattern. And how to do that? Well, I recommend anyone who is investing passively, this is the thing they should care more. Not looking for too many Darwins in his portfolio. I would say between 1 and 8 Darwins the most, so that he can have time to on a daily basis to check out if the Darwin is or the underlying strategy or the trader is getting crazy, because it can happen. And that moment, it's important to close the Darwin. Saying that, to be sure that the trader is not going to change his behavior, for those who are not used to or are not traders, are just investors, I would highly recommend to invest on Darwins that have a really large track record, and Darwins that already suffered drawdowns in the past, so that, because it's important to see how they reacted on those drawdowns. In general, if this is on passive investment. If you are approaching Darwins as an active trader in Darwins, then the approach is completely different. In that case, you should consider the Darwin as another asset, for example, as the euro-dollar. And in that case, you need to look to patterns of in such asset, the same way you do with the euro-dollar. And in that sense, there are specific Darwins that they behave well, and you can define exactly this stationary pattern. And whenever this stationary pattern changes, but I mean, just looking at the price, you would be able to define a stop out on it. We are working. So Darwinex Labs has massive tons of data of Darwins, and our idea is to share with an API all the data we have, and this is something we are working at, so that this approach that Darwinex Labs does when it's in the DWEX, or how we call it internally, the inbot, anyone could do. So the idea is that anyone can do what Darwinex Labs is doing right now. And as I said, this is, for doing that, it's important that we share the data, and as I said, we are working on it. And yes, we use stop losses in the bot, but as I said, considering just the price, not we take into account other statistics, but mostly the price. How many Darwin should investors include into their portfolio as a minimum? Well, so this is a massive answer. In fact, I am working with my team in trying to create an ebook based on what all these questions, which are, as I said, they are really so they require a lot of detail and a lot of
nuance.
Sorry, Juan.
Yeah, no. So we cannot really we can't answer this in a minute. It really, there has to be a nuanced answer.
It's complicated, but as a general rule, I would say that the less you know about trading, the less Darwins you should have in your portfolio, and the less you should move the portfolio. This is the general answer. And this is a good one. The next one. Finally, there are moments when supposedly uncorrelated Darwins, according to correlation table, seem like having a 0.99 correlation. What can I do apart from checking correlation table in order to diversify my portfolio? Again, in this ebook, we will talk about this. I agree with what Kirk says. The idea of having this correlation table, initially it was just because we wanted to give to investors a tool to see those Darwins who were really exactly the same. So there are people, for example, there are particular users that they run similar algorithms in different Darwins, and the idea was to find them easily. so that those Darwins who had a correlation above 0.90 over time, that you could understand that you should not never add both Darwins in your portfolio. But in order to create a compensated portfolio of Darwins, I agree with you that the past correlation doesn't mean future correlation. And for that reason, the best way to compensate a portfolio of Darwins, it's not based on the price. It's based on how different trading strategies they use. So for example, let's say I want to run a 4 Darwin portfolio. I could use one Darwin that trades just gold, and I will then use a Darwin that trades on the long term, and I will use a Darwin that trades just in the short term, and probably I will add another one who trades a lot of assets at the same time. So this is the best way to make a compensated portfolio. From the moment that you start adding similar Darwins into it, then probably can happen what he mentions, no? That suddenly in one day or what specific moment they all 4 go in the same direction, and they all 4 got hit it. No, that's just so as I said, the best way is to find completely different Darwin behaviors to avoid that. On the other side, we are checking internally to a way to show the correlation in real time, which is something which is possible without compromising the intellectual property. And this is if we share for traders, we have the deleverage defined for determine the position risk. And this is something we could use for the entire portfolio of the Darwin, and we could share it with the investor, saying, "Hey,
Javi, I mean, I think this is going to like too long. But
sorry.
basically, the summary is to say the original intention when creating the correlation matrix was not to give a sense of diversification, which isn't really there, as Kirk has already pointed out. It was to help people identify clones or near clones in the strategies very, very quickly. It wasn't really meant as a measure of true diversification, because it is true that if you do pick Darwins which trade similar strategies or similar timeframes and so on, you could find that at certain times they're all doing the same thing at the same time, and we're working on ways to help in that way. So the current correlation measure is designed to rule out clones, and the future one will help out in finding diversification, hopefully.
Yes.
So here's one for me with Hector, who wrote it in Spanish. I'll just translate for the benefit of the audience. Hi, I don't know if ESMA's intention is to weed out brokers from the market and just make the strongest have more customers and become bigger, or really help the customers. I saw that 80% of traders lose with the current leverage levels. What do we think the new leverage levels will help people? So to be very, very frank, I have no idea what ESMA was thinking when they came up with this reform. If it was down to me, I would have done things slightly differently. I do think there's too much leverage in the market right now, so in that sense, it is going to help. And then when it comes to the number of losers, that's not the number we see. We see a bigger percentage of winners, but ultimately, trading is a process. Everybody starts losing, and then the ones who persevere eventually find a way to make it in the long run. So you should really be put off by what others are doing. You should just think of using your money wisely. The first, you will inevitably lose in the beginning. You just have to make sure that you lose for a purpose where you're learning to manage risk and a bunch of other things. And eventually, if you persevere, you'll get to a point where you beat the others, because ultimately it's a zero-sum game. So Iefan is just asking whether we're looking into providing insurance for investors and traders who invest or have a trading account above 50,000 sterling. You see it as a major hurdle, and so do we. So we are definitely looking into it. When we offer it, which I think will be shortly, it's going to be for £500,000. So we will offer £450,000, pounds of extra cover above today's FSCS level. And yeah, this has been one which has been too long in the waiting, but it's well on its way. So thank you for hanging in there, Iefan, and we look forward to giving you that reassurance. Are we planning new withdrawal deposit methods in the near future? So the answer is we are going to add far more banking choice in the near future. And also we have recently added Trustly. I don't know if you know Trustly, but it's a very good way to make instant low-cost bank wires in the European Union. So if that is where you are, I guess this is Sadiq, then this could be right for you. I'm just going to check if there are any more questions. But I think that's that. So we've used up 45 minutes of everyone's time. So if anybody has any questions that they feel have not been answered properly, we can take them now. Well, it looks like we're good. I also wanted to comment on the letter by Ben, which was also signed by a bunch of very good traders, including Ben himself, Finbo, the asset manager contributing THA, FEG, and STV, Tommy, and Strive Trader. So I'll just give some comments on this one here. So thank you for the why you've chosen Darwinex. We for us it's a dream come true that you appreciate the differentiation in the value proposition. So thanks for that. So when it comes to the proprietary risk engine, we agree on the idea that there's an independent risk management service which is independent from the trade leader or the signal provider, and this protects investors. I think this is very important because when you are a Darwinex trader, you're not only exposed to how your strategy is doing, you're also exposed to somebody else exploding with another Darwin, and that investor who was invested in that Darwin withdrawing all their monies both from the Darwin that exploded but also from your own. So I think it's important for everybody that there's a referee who controls risks on behalf of everybody at Darwinex. So I think this is key. So having said that, they said that they say that the risk engine has some limitations. I think that if I have to step away from the specific comments they make right now, it's the biggest limitation we see to the risk engine right now is that it's a bit opaque for the risk for the trader, in the sense that we haven't really provided tools to give them insights as to what's going to happen if they do what, right? So the traders often say, I don't know if I do X, what is the Darwin or the risk manager going to do? And the plan for the future is to give the traders more and more transparency and usability, so they learn what's in line and what isn't. Having said that, it's obviously a risk manager which is the same for all strategies at Darwinex, and inevitably that will mean for some strategies it may be a bit too intrusive. We're obviously very keen to learn on how how to make it best. It is necessarily going to be a compromise. But it isn't as much a compromise as many claim. I think as long as traders trade within a range of leverage which is not too widely scattered, the risk manager is designed to hand control over to the trader. That is very much the intention. Whether or not we're already there, I don't know. It's obviously a question of time, and we will always look forward for feedback to make it better. But it's part of the necessary evil, right? You can't have it all your way. If we give you the asset management license and we run the risk, then at some point, you have to, it's a bit like taking a job. You cannot do it always the way you like it. But obviously, we're open to suggestions, and we have very much looked into what is being said here, and happy to look into individual cases. Javi, any point on that, on this one?
No, it's I can tell my personal experience. You mentioned that I was a trade leader in a copy trading platform that went bankrupt. It was called Currency. I don't know if someone else knows it. And as Juan mentioned, I had mostly 1 million under management, and just because one of the best trade leaders at that platform, he went crazy, and I think the 50% of the capital in the entire currency platform was in that Darwin and that strategy. And then once he got crazy, all other strategies were affected. So the company went bankrupt. So, I mean, was one of the reasons why we created Darwinex.
Okay, so the next one is capacity and slippage. So I guess the best point is liquidity is a rival good and hard fought. So there's a finite capacity for Darwins. So 2 points here. In the long run, we want to offer the Darwin provider more and more control on the execution of his investors on the one hand. So we want to give him tools to be able to optimize the execution, and secondly, we want to give him control over who is allowed to invest in his Darwins ultimately. So ultimately, a trader's most precious asset is his capacity, and he should be able to pick the best investors that he thinks are the worthiest of using that capacity the best. So what I say, for instance, if somebody buys THA in a high and dumps him in a low, that is basically, that represents a problem for Fimbo, because that eats into the high watermark, and it will be hard for Fimbo to make success fees from his limited capacity, and we appreciate that's an issue. So in the long run, we have a lot of ideas on how to tackle that. Again, this is all question of the number of engineers we can deploy to put them at work, but this is something which is very much on the agenda together with the introduction of features. Then Darwinex currently has a quite thin top of book, which is okay when talking about one of the very few true. However, when considering reaching large AUM levels that cause divergences, it would make sense to add liquidity providers. Now, so we have the same liquidity providers as everybody else. It's just that liquidity providers can stream different feeds. They can stream a very tight top of book feed, which is attractive for retail sizes, and they can also stream larger fill or kill fills, which are good for larger ticket sizes. And again, this is not a question of liquidity providers. We have the liquidity providers, and our prime brokers offer the possibility. It's just a need to introduce a logic whereby larger trades are put onto a separate feed by the same liquidity providers to improve that slippage. That's one point, and the other one is also some of the providers should also be aware that if they trade at during news releases and so on, by definition the book is going to be thinner at those times. So we know what needs to be done. It is not a question of adding more liquidity providers, because we've already got all the liquidity providers that everyone else. It's really a question of creating bespoke feeds, which will be, they will have a broader spread, but they will be better in taking larger clip sizes. And that's something that, is again on the agenda, again, a question of developers.
Mm-hmm. Yes, Juan, but there is another point, which is that traders right now, when they manage their strategy, they mostly think about themselves. They don't know exactly how much volume they are sending to the market. We know for sure, we have made some investigations. We know that the capacity depends mostly on how the trader fractions his trades. So if we made a test, for example, with the Darwin VTJ, who had with 1 million investors, he already had a massive divergence. He came to our office, and in just I said half an hour meeting, he made some changes in his execution logic, just fractioning his orders, and now he has no slippage at all. So it means no divergence. I mean, what we know is that we need to give much more information to Darwin providers, the more than they have now, in real time, so that they start thinking that they are not just managing his capital. And this is something at what we are, something that we are working already. It's like it will be a Darwin manager in which people will see, as I said, in real time what investors have opened, what lot size are setting the investors, how the trades are filled in the market. We'll give hints, or this is more in the long run. Our idea is take into account the trading history of the strategy. With an algorithm, we will try to give some hints automatically to the Darwin provider so that he knows how he can change the position size so that he can fill the investor volume with less divergence, and he will have access to tons of statistics and so on, so that he can increase the capacity. And I really think this is 80% of what's happening right now. It's not a matter, as Juan said, of liquidity providers. Whenever you want more liquidity, it's at a certain cost. It's at a cost of spread, or at a cost of guaranteeing latency, or guaranteeing certain volume or whatever. So it's not, nothing is free. And as I said, I think this is 20% of the problem. The biggest problem is that right now the Darwin providers, that they don't know anything of what happens whenever they do a trade with the investors. And this is something we are going to fix in the real short term.
Okay, so there's another question is, will we create Darwin funds, or for the option of creating Darwin funds? And this one, I mean, this has been on the cards for quite some time. We're just not sure of what the business model would be for such fund creators, because ultimately there's a question of gross versus net success fees that we can discuss in some other webinar. But yes, for sure, we know it is possible to make money with in investing in Darwins. So you know, we very much hope that more and more people are drawn to the idea. With the Darwin API, it might even be possible to create a kind of signal services and so on, or even Darwin EAs, which would be a bit like the fund situation. You know, it has come up right now. The capacity on the platform is, you know, we prefer to have expert users who try and build their own portfolios, rather than attract masses of passive investors who saturate capacity and don't really make the use of the platform as it currently stands. So this is not a feature. So we're going to prioritize, put it another way, we're going to prioritize giving traders far better control over investors before we prioritize investor acquisition, because you know, the performance will just not be there if the traders cannot manage the capacity best. So we put it another way, we'll fix the capacity and slippage. We have to fix that one before we even think about the next one, because maybe we will, you know, if that is solved well and more and better traders join the platform, there's no need for passive investors. Yeah, and then the point on future of Darwinex. I mean, I guess this one I have to make as the, you know, it's not like we totally get your points, guys, right? So we totally understand the gaps in the product. It's not like we don't see them. It's not like we have made a deliberate choice to offer a bad product. We're doing the best we can, and with the means we've got. And actually, if you want us to deliver faster on the promise, as I said, we'd rather spend €1 of incremental revenue in engineers than we will in advertising. So we very much need an active community of traders who give us these very, very valuable suggestions, but also who actively, you know, share the platform with others, because the more users, the bigger revenues, the faster we can deploy we can fix the gaps. So none of what's here comes as a surprise. Thank you guys for, you know, Ben and Atu and Tommy and all the other guys. So we know these issues must be fixed. We have known for years, so it's not like this comes as a surprise. It's just, as I said, you know, we're doing the best we can with 45 employees. that's the long and the short we can say at this point in time. So you want us to become adult. Well, we need you guys to bring more traders to the platform, because we do not market make. We have low margins and we cannot advertise to accelerate the growth. It has to be you guys. It's either it's either trader movement spreads by itself, or we will remain a child in that sense, because we would rather invest in developers than we do in advertising. Any points on that, Javi?
No, it's true. So the thing is that what we mentioned, it seems that it's the company and the clients, and I think Darwinex has shown in the past that we really work for creating an ecosystem that makes the best for everyone, not just the company owners, is for all the customers. And we really need, so in such environment in which market makers are doing so much money, we cannot compete with them in doing marketing. It doesn't deserve money on that. So we really require that our users help us to grow.
Which they have done, by the way. I mean, I think Darwinex is about 8 times the size. We are 8 times the size of where we were 2.5 years ago. So we have grown substantially, but it's the bigger the product gets, the more engineers are required to improve it going forward. So unfortunately, there are the first 10 engineers give you a lot more seeming traction than the from the 40th to the 60th. But you have to go through that pace, otherwise it doesn't happen. And also, I mean, the other thing is it's easy to get frustrated, but we have come a long way. I think we should also say that the platform improves every day, not in big leaps, but there are continuous improvements. There are bugs that are removed. It is very, very robust. It has never gone down. I mean, there are many good things about it already. Okay, I think that that was pretty much all we had in mind. So unless somebody has any follow-up questions, we would probably bring this to a close. There's been some comments on swap rates, and the answer is yes, we're looking at improving our swap rates. We pass on the swap rates we get from our providers, in this case, LMAX. So it's not as though we're marking them up, but we are putting pressure because we appreciate they are high comparatively to the competitiveness of the spread. Any more points? No, so it looks like we're done. So, there is one more thing apparently by Sadiq. So I'll wait for that one. So guys, please think about the last questions, because I don't want to use up more than 1 hour of your time. Actually, if all the guys that are here, I mean, just to do a very small sample. So how did you guys learn about Darwinex, if I may ask? So if you could let us know. That would be very, very useful, because that helps us prioritize the efforts, okay? So 50 pips, who's a very long and trusted friend. John Trader. So it basically seems to be recommendations. MyFX book, Quora, Twitter. Okay, I mean, yeah, it's kind of organic, right? So those are the places where we talk to people. Thank you so much for answering, guys. We really appreciate it. So I think that was that. There was a question by Sadiq who's saying that he cannot use Trustly. If you're in Europe, I think Bankwire should work well enough, I would have thought. But let us know if you have any ideas on that one. Okay, guys, I think that's it for today. Thank you so much for showing up and staying through until the end of the webinar. We really appreciate it. If there are any follow-up questions, please do send them along, and we will keep repeating these webinars on a periodic basis. It's great to have some of the best traders over here. So Volcano FX, Dora, pleased to meet you, and thank you for being here. We'll do our very, very best to keep delivering on for you to make what you're worth, which is a lot. So thank you, guys, and we speak on the next one. Yeah, take care. Bye.
Bye.